Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this sheet in front of us is the review of the audited financial statements. It essentially takes the audited audit and the large audit and summarizes it into 4 pages, and there's a couple other calculations and some other information included. So we use this in our office as a form of communication between myself and others in the office, our field reps and everyone, so we thought we'd bring it to the boards. We have in the past at these regional trainings, but we felt this was more customized to the school and better, so we hope you like the delivery method. So as we move into the sheet, I'll show you where this is at on the audit. So here's the statement of net position. This is the title of the heading. As an example, to show you this is from the audit, we'll look at total assets. The total assets are $6,762,734. So we'll go to the audit. So here's the statement of net position, and there's our current assets, and here's our total assets, $6,762,734. So if you wanted to look at the other numbers, you can do that, and then I won't get into that now though. So we'll go back to our sheet. Here's the other numbers, liabilities. Down here is the ending net position. So this is the June 30th, 2014 net position. Previous net position is the June 30th, 2013 net position. So you can compare the two really quickly from here. Also, you can notice that the net position increased from last year, which is good. So before we move over here, we'll move down. These are balance sheet general fund current assets, cash, etc. And then over here is the balance sheet general fund classifications. So we will go back to the audit. The balance sheet is 2 pages after the statement of net position. So 1, 2. Here's balance sheet. Again, even though there's debt service, there's a debt service fund, we're going to stick in the general fund. So these are the assets that should match up to the sheet. And then as we move down, we'll see our fund classification. So there's actually a negative unassigned fund balance of $50,475. So we'll go back in a non-spendable amount. We'll go back to the sheet, and we'll see here's all the assets, the current assets and stuff. As we come over here, we'll see our non-spendable amount and then our unassigned amount. If you don't know what these are, these definitions are directly in the audit. I'll tell you what they are for Crescent Academy. The unassigned fund balance are amounts that are available for any purpose. These amounts are reported only in the general fund. And then non-spendable is amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. Excuse me. So these other classifications aren't being utilized by the school, so I won't read them, but know that the definition's in the audit and you can find it pretty fast. So general fund, this we'll move back up here. This is kind of a snapshot of the current year's activity. So there's a beginning general fund balance of $37,000. The revenue, total revenues, total expenditures, other financing sources, net change, and then the ending general fund balance. So this takes the activity during the year and summarizes it and puts it in a snapshot, essentially. Below that, we have a couple calculations. There's general fund divided by revenues, which takes the ending general fund, divides by total revenues, and then general fund minus restricted. So if there's a restricted amount down here, it essentially does the same calculation except subtracts restricted first. There was no restricted amount, which is why these are the same. General fund divided by expenditures takes the ending general fund balance, divides by total expenditures, and then beginning general fund divided by, ending general fund divided by beginning general fund takes this, divides by this. If this is above 100%, there was an increase, which is well above 100%, there was a large net change. If it's below 100%, there was a decrease in net change. So some people, the state I think, looks at general fund divided by expenditures. We don't. We like to compare both of these because if there's a large capital outlay or something in a particular year, it can skew these numbers. So it's important to look at both of these and understand why one is different from the other. So if you're not breaking even, it will show up in these two numbers, and you should be able to compare things and try to. They're there to ask questions, not to tell you exactly. Obviously, if they're trending upwards, the general fund balance is increasing. So As we scroll down, so these four boxes here, these four boxes summarize the notes section of the audit. So the notes are typed up in this sheet on page 4, but this is kind of a numeric table representation of that data. So notes payable is usually associated with state aid notes, other short-term borrowing. So that's what that is. Revenue bond, this is the revenue bond for the school. This is just the principal payment, doesn't include the interest payments. However, over here we will show that. Management fees, this is just the management fees for the school, directly derived from the audit. This is not the percentage that is in the contract. This takes the total fees and then divides it by total state aid. It's just a calculation. So if you're wondering why that's a little different, that's why. And then earned divided by fall 2013 takes the total management fees and divides it by the fall 2013 count, which is the corresponding count for this fiscal year. So over here, this is somewhat unique. This is unique to Crescent Academy. To Crescent Academy. It's the only school that has this many buildings. So I didn't label all these out like this on other sheets. So this is customization, so to speak. So this should be the lease payment amount for each building. So, and then the revenue bond, the building that's financed with revenue bond, this includes both principal and interest. So this should hopefully this encompasses everything. These are from the audit again. The principal and interest amounts were from the previous audit because they on the payment schedule for the debt. So that's where that comes from. So as we move down, we'll see total square footage. This should include all 5 buildings. So if this is inaccurate, let us know and we'll have to update it. Hopefully it is. We had to dig pretty deep to try to find that for 5 buildings. So utilizing that, we have our revenues per square foot, which takes total revenues and divides by square footage. Expense per square foot, same thing. And then difference, again, look at these relationships and try to say why is these different and that kind of thing. Payment per square foot. This calculation is a little different. If you notice up here, it takes all of these payments and then divides by the total square footage. And so that's what that is. So the total payment per square foot for all these buildings, taking all these lease payments, is $11. I believe our average is 14. So the school is good in that respect. Even though there's a lot of buildings and a lot of stuff going on, it's still pretty good. Operations and maintenance takes the total square footage, or excuse me, the line item of operations and maintenance, and divides it by the total square footage. So that's where that number is derived from. That's pretty middle of the road as well. And then square footage divided by fall 2013 takes the square footage and divides it by that fall 2013 count. So those are all the calculations. Hopefully it makes sense where they're coming from. As we go down into page 2, this is the general fund comparison. This allows you to look at June 30th, 2014 actual, June 30th, 2013 actual, and then the difference. So enrollment has trended up heavily at Crescent Academy, so you'll see that there's a lot of increase in state aid. So these are the type of things that you can look at with this sheet. I won't go through every individual line item, but you can kind of look at it yourself. If you don't know what one of these are, especially the board members, if you don't know what one of these are, we'll use basic programs as an example, but you can look it up pretty quickly. I took the accounting manual, put it in Microsoft Word, then you come up and you push the find button, and then you type in what you're looking for for this example, basic programs. Then this will, if you're on results, you can come down here and just click through it, and this will show you where it's highlighted. Now you can't come in here and type something like instruction because it's in here way too many times. It won't let you do that. But if you're kind of focused on your search, you're able to do that. So basic programs, here's the accounting code number. So this is how it's coded in the accounting system. And then basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. It includes pre-kindergarten, elementary, etc. So you could go through and read all these. I'm not going to do that for time. But again, if you don't know what any of these are, it's pretty easy to figure them out if you use that little trick I just showed you. So as we scroll down, This ending general fund should match up with that little box in the upper right hand corner. This is 2014, 2013 again. So right here we have our budgetary comparison. This is the original budget, the final budget, the actual. The budget difference is the difference between the actual and the final, and then the percent change is the percent change between the actual and the final. So this little memo here just states that the original budget is due July 1. It's a reminder to myself and others in the office that the original budget is due well before the fall 2013 count in this audit period, and that's why usually there's a large discrepancy. Now there isn't too bad of a discrepancy in Crescent Academy's case, but some of our other schools there's a large discrepancy due to that fact. So as we scroll down to this little box, this is the instruction divided by revenues. So and then put in a percentage, so you'll see the trend 46, 49, 39. So if we go up here, so what this does is it takes the total instruction and divides by total revenues. So again, instruction divided by revenue. So that's why this this number, the state aid went up by so much, and if it wasn't all invested into this line item, that percentage will drop. So you don't think that this is just a bad indicator. It's just an indicator. So you gotta know, and that it lets you ask the question. So an example of how this indicator could be somewhat skewed or misleading is if a teacher that was getting paid $50,000 resigned or retired, whatever, and then a new teacher was hired for $30,000, this number would go down. But it doesn't mean that the school is receiving less instruction, or the students are receiving less instruction. So this number isn't an absolute, this trend isn't an absolute, it's just a means of asking a question, you know, what's going on here. So that's just what that is. Revenues divided by fall 2013 count takes the total revenues and divides it by that fall 2013 count. And then same thing with expenditures difference. Another indicator to look at from year to year, just to measure and track from year to year. As we move into page 3, this is the enrollment numbers. So these numbers are derived from CEPI, which there's so many acronyms in education that I will show you what I mean when I say CEPI. CEPI stands for the Center for Educational Performance and Information. This is a state website. So to get these enrollment numbers, you'd come down here and you push My School Data, and then that'll take you to some filters, and then you pick what if you want student count or free and reduced lunch count, special education. And then here's all these spreadsheets. They go down to 91, 92, so you could look up the count data for a long time. These are massive spreadsheets, so I dug all this stuff out for you guys. If you notice I didn't highlight the last one, this one is actually the unaudited number I received through Epicenter, which is the file transfer program we use between the charter school office and the school. So this is the unaudited number that's on the DS 4061 sheet. So this number may change once the audited numbers are released. So if you notice that from year to year, kudos to you, but that's the reason why it's changed. So spring 2011 to fall 2010. This takes a This is a numeric comparison from count to count. So count to count, count to count, and then this shows the percent change. So as we come down here, this shows a graphical portrayal of the data for people who are visual people. So that's that, and then as we move down here, we have our free and reduced lunch counts. Now these are all from CEPI, and then this over here is the percent free and reduced lunch which takes this count and divides it by the total foul count, and that's where these numbers are derived from. So again, as we scroll down, we'll see our actual count data in the graph down here for visual people. So as we move down into page 4, this is a massive amount of notes because there's a lot of financial stuff going on with 5 buildings and stuff. So here's all I tried to bold what each area was about: notes payable, long-term obligation. This is all from the audit. If you wanted to see it, it's the page numbers are listed. So page 17, page 18, 19, the revenue bond. So if there's anything down here that you have a question about, just read it here. If it doesn't seem right to you, go look it up on the audit, and then see if it makes sense that way. So I won't go through all that because we have those tables on page 1 that kind of summarizes a lot of that. So as we scroll down, this is the management company information from the audit, page 8. There was no findings, which is good. and then just a couple more notes from the audit that were relevant. And again, this is from the audit, so I didn't write this. This is from the audit. So I think that's going to be it. I hope you enjoyed this delivery method. And I got to say thank you for this wonderful cup. I don't know if this will show up on the camera, but I got this wonderful cup at renewal last year. Very nice cup. And I use it while I make all these videos. So thank you for that, and hope you're staying warm. Have a good one, and take care. Bye.